Everyone dreams of being rich and financially free. We chase the higher returns, the next hot stock, hoping you can get the next breakthrough and get the highest return. But lasting wealth isn't about chasing returns. It's about flipping the financial freedom. Be your own bank. Turn that into your favor. Don't give your money to the bank. Hi, this is Jane. Welcome to the Tax-Exempt Millionaire Club. I would like to show you what I put together as the B.O.L.D method. I use WOW, Wealth on Wheels system, as the name of the system. The method is B.O.L.D. I want to show you how you could stop borrowing money from the bank. Be the bank. The method we discussed today is the powerful B.O.L.D method. B stands for bank, O ownership, L leverage, and D discipline. The whole entire method will give you this proven framework to fast track your wealth accumulation. You will take full control of your money, build your personal wealth system, your personal banking system, so you can lend money instead of begging the bank to give you the mortgage, to give you the loan. You will get the strategy to grow your wealth tax free. If you have to pay tax, you have to pay tax. But we have to move money into the tax deferred or tax favored bucket. Learn to leverage other people's money, you can become a tax exempt multimillionaire soon. Now, I want to encourage you get ready to rethink everything you thought about money. Ditch the bank you are banking with, be your own bank. Let me share the PowerPoint so we'll discuss that in detail. Welcome to this webinar. The title is Wealth on Wheels. Don't borrow from the banks. Become one. We'll talk about the B.O.L.D method and how to become tax exempt millionaires. Quick disclaimer, I'm not a licensed CPA, tax attorney, or financial advisor. I am licensed life insurance agent in multiple states. Here's something about me. I think myself as a lifetime learner and tax strategist. We all pay a lot of tax. In my last 25 years in the US, originally from Beijing, China, the more I think about the tax, the money flow, the more I think we really need to drill down and see how we could legally and morally save more tax and be more tax savvy. I'm the author and educator. I create this WOW Wealth on Wheels Express train. I really want to bring this B.O.L.D method to everyone's mind. Try to change the methodology of banking. Since we are dealing with money, who has money? Banks. Why don't we be the bank instead of using banks? I want to help other people to achieve that financial freedom everybody is looking for, but sometimes we don't know where to start or how to get where we want to be. I'm the mom of three dual masters here in the US, and I went to the traditional way, find myself a job, bought a house, had a couple of kids, and lived the American dream. Because I want to be the lifetime learner, I keep taking certifications. I know that's not an easy task, especially when you are working full time with kids, but I was constantly seeking the right path or the right way for me to realize my financial freedom. I'm also what I call heart-centric entrepreneur. I'm not in this for money. I want to get this message out. I want to share the message to the world, to as many people as I can. I wish I knew what I know now 20 years ago. Society is missing the education on personal finance, the cash flow management, the tax strategies. As the recording of this video, we have a new 900 tax bill passed by our President Donald Trump. Who has time to analyze all of that? Yes, that's the CPA, tax attorney, their job. But why don't we take some of those which will apply to our particular situation and know as much as we can? Then we can go to the professional to ask concrete and solid questions so we can best utilize these strategies available to us. I'm also an AI enthusiastic. I know AI will change everything the next 10, 20 years. Look at what AI has done in our lives. Things changed, and we can do a lot of things so much efficient compared to even 2, 3 years ago. So let me ask you a question. Do you want to be a tax exempt multimillionaires? I'm sure the answer is yes, but let's start with why. What's the why, the underneath why you want to do this? If you know your why, you know your action, your implementation, then you can figure out how to do that and where you want to go. Now, I want to introduce this system, wealth on wheels. We want to put our wealth on wheels so it can go fast. Let's break it down. B.O.L.D, bank, ownership, leverage, discipline. Let's look at one by one. Bank, flipping your banking function. Right now, we save money in the bank. We bank with different commercial banks. If we need a mortgage or we do real estate investment or buying and selling businesses, if our money is with the bank, what are we doing? We are giving the bank our own money to lend it out, to do high interest rates with those credit cards. We are helping them to do their business. But when we want to borrow some money from the bank, they require 3 year tax return, W-2, or Schedule C or Schedule E. They require a bunch of documents and all kinds of explanation if you have suddenly some large deposits. They are in their process to do the so-called due diligence to make sure you are a qualified borrower. In the meantime, they just made this process so difficult. What about we could flip it? We become the bank. We need our money in different banks. Then we can take the money, withdraw it, or borrow it. We could do transactional lending, buy and sell properties. We could invest in companies. And we have a lot of flexibility compared to the previous scenario. We could also lend the money out as a bank with the investors, such as transactional lending or EMD funding, the earnest money deposit funding. Once we pull the money out, buy a property and have the cash flow, if we buy cheaper, smaller houses, after a few years, the cash flow will exceed the principal. Then we have infinite return. We will show you the details, what other banks and how we can build them. In the meantime, we as the owner, we take full control of our own banks. Yes, of course, we have to build up the bank first. The bank has to have money. We can use our saving, retirement account, or any other source of income, such as the proceed of selling a property, or maybe even flip a property. So it takes a little bit time to build the banks up. But there's a beauty of that. At a later stage of the journey, you can enjoy all the benefit, what I'm going to show you next. We'll talk about 3 different things. I call it ABC. A is a self-directed Roth account. It can be traditional, but we prefer Roth. IRS gives a lot of incentives to put that as a Roth. The main difference between traditional and Roth, just very quickly, traditional accounts, you put pre-tax money in, tax deferred and taxable when you withdraw all your money out. Count taxed dollar in, tax deferred, tax free growth. When you take the money out, every single dollar is tax free. There's a lot of additional benefit for Roth IRA or Roth accounts versus traditional. What we're talking here is not a regular RA or 401k. You open it up with Fidelity or Vanguard. We have to set it up with specific custodians, and we have to do which is called self-directed Roth accounts. We'll mention in details, there's many types of Roth accounts, Roth retirement accounts. The main advantage is control of your investment in addition to the stock, mutual fund, or ETF. Now, because the accounts are self-directed, you can buy properties, you can invest in companies, you can invest in crypto, precious metal, and so on. There's also prohibited transaction, which we'll mention briefly. Remember, we were saying tax deferred and tax free growth. All the growth inside of the Roth accounts is tax free. You can access to your principal anytime. There's specific rules about penalty if you do early withdrawal before 59 and a half. Yes, there's a lot of benefit about self-directed Roth accounts, but there's also some pitfalls, such as there's some contribution limits. For different Roth accounts, IRS will allow you to contribute to different limits, sometimes also related to your earned income for that year. There's prohibited transactions I just mentioned. IRS states clearly what the transactions are prohibited. Make sure you don't do prohibited transactions. If you do, IRS can reverse this account and it pretty much becomes a standard brokerage account. There's a compliance. We have to do all the documentation to show what we are doing inside those self-directed Roth accounts. There's something called unrelated business income tax. If you leverage to buy assets, for example, if you bought a 200K single family house, you only have 100K inside of your self-directed Roth RA. Let's say it's an IRA. You borrowed 50%, 100K to own that property. The income, just say for easy math, 10K is your net income. That's 10K because you leverage 50%, half of the 10K will be subject to this UBIT because 5,000 is what it called UBTI, unrelated business taxable income. Because this income is subject to the UBIT and it goes with the trust bracket. So very easily you will start paying 37%. That's something we really need to think about. It doesn't mean you should not do any leverage. It just means you need to plan well and make sure you're aware of this situation. Self-directed Roth solo 401k. That's one of my favorite. If you are a solopreneur, you don't have anyone under your payroll, you should be eligible for funding this self-directed Roth solo 401k. Keep my mouth full. And that's one of the best strategies. Some pros, tax deferred growth, tax free distribution if it's a Roth account, available for anyone with earned income. Of course, there's certain rules. There's a contribution limit. We have to follow the IRS guidelines. It's dollar by dollar to access your money compared to Bank B, which will not be dollar by dollar when you set up. It means if this year you contribute, for example, the self-directed solo 401k, you contribute 20,000 into that account, you have $20,000 there in that bank. Cons, there are some contribution limits, there's penalties if you overfund it. Of course, are always rules and regulations, prohibited transactions, documentation under the IRS guidelines. The UBIT, UBIT we mentioned if you leverage to purchase different assets, with an exception for self-directed solo 401k. And because of all the restrictions, if you didn't do things right, there will be penalties. Now let's look at Bank B. high cash value life insurance as the IBC policy. We don't have time to go into detail, but I want to highlight key points. Why set up high cash value life insurance policies? Remember, we are very tax driven. We want to pay as little as possible tax wise, income tax wise. And we also want to do it the right way. We will use what IRS allows us to use, all the tools available to us. So the IRC code, Internal Revenue Code 7702, governs all the life insurance policies, how the tax will play after tax money and tax deferred and tax free gross. When you take it out, there's two scenarios. One is the withdrawal, first in, first out. Your principal is your after tax money, there's no tax. If the withdrawal amount is over your contribution, it will be taxed as ordinary income that year. What we suggest clients to do is to take as a loan your policy, because it's a permanent life insurance, your policy will be act as a collateral. So basically, you're borrowing money from the carrier of your life insurance policy. Yes, because it's a loan, you have to pay interest, but there's no tax involved. You will not pay personal income tax when you access your money as a loan from your policy. It's one of the best wealth building tools. It has a protection component because it has to be a life insurance policy. And there's something called the modified endowment contract. It's similar to the penalties of self directed Roth accounts. You still have certain rules to follow, but we like the flexibility. We like the fact that your money is continuing growing, even you have a loan against it. If you put the interest back, put the loan back, your policy will restore as if you never touched your cash value. There's a lot of benefit, which we will not go into detail for this, but we will talk in detail in our course. This is a little wordy, but we mentioned a few things already. It's one of the tools we want to use to set up our own bank, to put the money in, take the money out as a loan, and do alternative investments. Is tax-free growth, tax-free access as a loan, as well as the death benefit will be income tax-free. It will be subject to inheritance tax and estate tax. One advantage is the contribution limit. As long as you have eligibility, insurability, and can show your total asset, those contribution limit does not apply. This is much flexible. The next one will be quick. It's also an instant banking concept, which will just use the money on a consistent basis. We put the money back, restore our loan. It can be HELOC, the home equity line of credit, the home equity loan, or DSCR loan. If you have rental properties, MTR and STR, they're very popular. A lot of people can use that strategy to access their equity for those MTR or STR properties. It's another bank we can build up, do the same alternate investment, buy properties, put the rental income back, pay the interest, and once you restore it, start over and make it an instant return. Now we talk about several bank A, B, and C. A is the self-directed Roth accounts. B is the instant banking policy using high cash value life insurance. Bank C is the ESCR loan. Now we put assets into our banks or take the money out and do what the bank does. They find qualified borrowers and then they earn high interest, lending the money to those qualified borrowers. We can do it exact the same, but because of different accounts or banks we set up, they have different tax strategies. We need to know what we need to do, cannot do, and should do. Later in this presentation, we'll go a little bit detail about those tax benefits. Look at the second one, ownership. Ownership is very simple. I want everybody to own financial future. I know we all do it, right? We went to school, we got a job, we start paying all the bills, all the obligations we have to do. We have kids to raise if you have started a family, but own it. When you own it, you have to quality control it. You have to take full ownership. When you own it, you will find ways and strategies to make it better, to go where you want to be. To me, the ownership is about control. It's about quality control. I was a bench chemist for the first 8 years in the US. So I want to incorporate the quality concept into our coaching. The quality concept can govern our express train. Remember, we're building this train, we're building our whole entire wealth on this train to put it on wheels. The engine creates all the power and it will govern the whole train to go in when it needs to be in a faster speed. We'll talk about quality concept. If you take 100% ownership of your finance, I'm sure you will get where you want to be. Let's look at leverage. OPM and OPT. OPM means other people's money. OPT, other people's time. Right now, for OPM, we know banks are lending money. While we try to build up our banks, we need money to create money, to generate more money. We can use other people's money from the bank as long as we have a plan to pay it. In our program, we could also help you for your credit repair. And then once you qualify, you could apply for 0% credit card up to 100 to 150K. Remember, those banks, they want someone to use their money. They don't want the money sitting on their balance sheet. They know once they lend out 1 million, there are always people who cannot pay by the 0% APR deadline. They will start getting that 18, 20, even sometimes 30% APR. But as long as we have a plan, we can use that 100 to 150K once you qualify as a jumpstart of financial future. We don't want paying 18, 20, 30% interest to negatively impact our financial journey. We'll educate you on credit building as well as how you could make yourself qualify for that kind of OPM, other people's money. The OPT, other people's time, is about leveraging what you could create. Have other people work in the system so you can multiply your time and be super productive. The last but not the least, discipline. I think I cannot emphasize this enough. Building wealth is not an easy task. It takes the discipline, it takes the consistency. We all know the power of compound effect. Albert Einstein said the compound effect is the eighth wonder of the world. I want to show you something I asked ChatGPT to create. The first exponential curve shows every single year you put in 10K into this account. It grows consistently 20% year after year. This chart, which shows after 20 years, how much money you accumulating. The end result is about 2.2. The second scenario, which is try to mimic what regular investment, you have up and downs. I have plateaued. I have 5%, 20%, 30%, just give it a jump up. So we'll see how big difference with those minus years and the 0% years, it impacts the end result significantly. The same scenario, 10K each month for 20 years. But with this hypothetical situation, the end result is 325,000. Compared to the first scenario and the second one, almost 7 times difference. You can see the compound effect. Now a real example. Slow Flip is a program by Scott Gillen. I'm a student. I bought my first one and I will act as the bank because we want everything congruent together. I bought this house about 35,000 with some closing costs. We sold this at 4,000 down payment $1,150 per month for 30 years. I bought this using my self-directed Roth IRA. It is a tax-exempt account as what we discussed. The caveat here is I cannot physically touch the money. Everything will go from the tenant buyer directly to the self-directed Roth IRA. It's with the property tax and home insurance, roughly 30 return, cash on cash return. After about 2.5, 3 years, I should be able to get all my money back, my principal back to the self-directed Roth account. And then all the future years, it's infinite return because all my principals back to the self-direct Roth IRA. I want to show you the power of doing such inside a self-directed Roth 401k account. Here, we want to compare if we do this slow flip in a self-directed solo 401k or self-directed Roth IRA. I want to show the tax impact and how this will actually work. If we buy this property inside of the self-directed account, I list several of them here. We assume you buy cash 100% of the money inside one of the accounts. Because of the tax feature of this Roth, you don't pay anything on the rent income. You will still need to document how much money you receive. There's a fair market value at the end of each year, December 31st. You have to send to the IRS, but there's no depreciation. We all know the depreciation is so-called paper loss. IRS allows you to depreciate certain assets, real assets. Because of the feature of its self-directed loss, you won't be able to depreciate anything on paper, and all the money should be directly getting from the tenant buyer and then deposit into your self-directed Roth account. Each account is its own entity already. Just remember that. Versus if you do this using the bank B, just say you put 50,000, you will not have 50,000 to access dollar by dollar. Depends on your health rating, your age, and then which carrier, what kind of life insurance, either IUL or whole life you can access to X dollar amount of that 50,000. Hopefully your agent is designing this as a high cash value life insurance policy. So you can access to the cash value as much as possible. Just say you have 35,000, you take it out as a loan. Remember, the loan will have its cost, which you pay the 5%, 6%, or whatever the carrier is charging you to the carrier each year. We suggest all our clients to pay the interest every single year. Don't miss this because you don't want to pay the interest on top of the interest every single year. Things will add up. The good thing about utilizing this strategy, because you take the loan out, you own that real estate. On paper, you report all your rental income on Schedule E, take the depreciation, the paper loss. And when you sell it, you have the appreciation as well. What about using the Bank C HELOC or DSCR loan? Will be dollar by dollar. If you get your HELOC as 40,000, you have access to 40,000. Most of the time, the HELOC rate is much higher. If the DSCR loan, sometimes it's even higher than what I listed, the 8% to 10%. I want to show you a benchmark I want to use for people who are interested to get to the tax-exempt $1 million status as fast as he or she can be. I want to use that 60,000 a year, which correlate to 5K per month. If you divide a portion to the self-directed Roth account, a portion to the high cash value life insurance policy, and then you do the investing, we're making a lot of assumptions here. To give you some illustration, the actual result may vary a little bit, depends on several factors. But we can see the chart, which the Infinite banking concept, it's not dollar by dollar. Your growth is not as significant as bank A because B will have a little quote by quote loss. There's policy fees, there's cost of insurance because it's a life insurance policy. The growth on bank A and B will be a little different. We have two buckets, two banks, using them to help us get to $1 million using the $60,000 per year as the funding scenario. We need to fund it every year. We have the strategy to pull the money out, buy the cash flowing asset, put the money back, pay interest or other expenses. And then to let the money grow, it's like a snowball. Remember, we have both legs and keep contributing. Once you have more money, you can contribute more. You don't have to contribute 60,000. And then the more you put into both things, your lending power will get magnified. 7 to 9 years is our target time frame, utilizing the 60,000 per year strategy to 1 million. What we are doing is we are taking the time, but we are also utilizing the tax strategies, the asset, the real estate asset, and flipping companies. Now I'm giving you the framework of the B.O.L.D method. Remember, your 1 million is just a benchmark. Your money will not stop growing. If you know the system, you know how to grow your money, it will not stop. I want you to really study what I'm showing you here. You could do it yourself, find different YouTubes and gurus, but I want you to put everything together to own this lifetime skill to get to your financial freedom. The B.O.L.D method, bank, ownership, leverage, and discipline will get you where you want to be financially. I can guarantee the system works. I cannot guarantee your result because you have to first have the drive. You need to have the money, especially the seed money we were talking about. You also have a plan. Once you have the plan, you actually need to execute it. And then you also need the quality concept to really govern you to the success you need. The check or the review process is super important to make us stay on track and propel us to the success. I have this free school community called Tax-Exempt Millionaire Club. I encourage you to join. If this method resonates you, if you want to learn more, feel free to join my school community. I have a very active community and I'm also diligently growing it so it can benefit many people. Feel free to book a 15 minutes call and see how Jane can help you. I'm not saying my method is one of the best, but I think the holistic approach is one of the key component which is missing. You see a lot of people, they teach you one thing in one narrow investing. For example, option trading. People teaching you how you invest in non-performing notes. People teaching you how you buy and sell companies. But our finance is a piece of pie. How we could move the pie around and make that piece, which belongs to Uncle Sam, the tax, as little as possible, with the compound effect in the tax favored accounts. That's where the magic could happen. You can scan the QR code to join my free school community. I wish to see you inside. I hope my B.O.L.D method gives you some hints and it will pave the road a little bit to your financial freedom journey. The Chinese proverb said, the best time to plant a tree was 20 years ago. The next best time is now. You don't need to be wealthy to start, but you must start to be wealthy. I wish you the best success of your wealth accumulation. Happy investing and happy wealth accumulating. I'll see you inside in my school community. You can also scan this QR code on the screen. And I wish you to become the next tax exempt millionaire soon. Bye.